in the midst of really understanding all of the lessons learned from the failure of FTX. And really, it's about understanding where were customer assets kept, how were they thought about segregated from all of the different holdings that were as part of those entities, and what does an orderly bankruptcy look like in a case where there are cryptocurrency assets held on behalf of customers as well as enterprise funds. So these are the types of things that we have to really understand what happened in the case of FTX and how regulators should be looking at the types of organizations that should be holding customer funds on behalf of retail investors.
I don't know if you heard the headlines that we were just reading out there. FTX has already begun receiving interest from potential buyers for its assets. Isn't this a bit premature to be embarking on this process before the proper regulation is in place, Jonathan?
So I think when you think about FTX and the assets going through the bankruptcy proceedings, there are a lot of different assets out there, and there are lots of regulatory regulated firms within the assets that do exist as part of FTX. Some of which, like LedgerX, are functioning today, and there are other entities within the portfolio and equity interests and other things as part of the portfolio that all are either part of regulated entities or are other assets that are in sort of unregulated spaces. And so I think you could see that there will be a lot of investors that have deep conviction in cryptocurrency markets who are looking at picking up some distressed assets.
Just on your point of desegregating the assets, which is a critical one, that the FTX platform contained a trading operation within it, Alameda, clear conflict of interest, and it almost echoes the big banks, doesn't it? The big investment banks trading and buying the physical asset at the same time. So this seems to be the heart of the problem. Why, in your opinion, Jonathan, did no one call that out until it was too late? And in terms of regulation, how straightforward or otherwise is it going to be to break up these entities if that is what is necessary?
I think that, in the case of FTX, there was, as you can see in the bankruptcy report that's been filed in the court, there were, a lot of things missing from, how FTX was operating. And clearly in this case, the representations that were made prior to the current administrator taking over, have turned out to be false, and there've been some revelations that will continue to come out through the bankruptcy proceedings here. And so I think what it's important to look at here is this is clearly an act of financial fraud by individuals. There's also, though, lots of regulated players within the market where these conflicts of interest do not exist. And it's about understanding the difference between sort of the rogue actors in the industry and the good actors who are really have been operating in a regulatory environment for a really long time.